Welcome back to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. Online, find us at zinniawealth.com, Zinnia wealth.com. There's a lot for you to comb through there. There's a button up at the top that says education, and when you click on that, you'll see useful guides. There's a lot there to comb through. You can download a lot of different things. Just check that out today, zinniawealth.com. This is a fun question. You know, we talk about all the time, when is the best time to bring a financial advisor into your life? Is it a certain age that you reach, when it's 62 or 63? Or is it a level of savings when you get to $500,000? Well, MarketWatch flipped that question around, and they said, when is the worst time to bring a financial professional into your life? And their answer was later. Everybody puts this off. So I wanted to ask you that because you've said this before. You get somebody in, you build a retirement plan. Maybe they were hesitant to come in, and they finally came in, and what comes back to you is, oh, Sharice, why didn't I come in here 5 years ago?
Oh my gosh, this resonates because of a family I just met. And it's interesting because they retired around 2010. And the wife was the risk taker in the household. The husband was more conservative. And I said, you know, now that you're living on your money that you've saved all these years, and now the market has just gone up and away, my question to you is, do you still want to risk your money at a 50% potential loss in the future when the market crashes? She's like, Sharice, if I can make 22% year over year in my accounts, then why would I go with an investment that's only going to give me 6 or 7%? And I had to sit back and just take a breath. I'm like, okay, I am going to have to do some serious educating. And I looked at her, husband, and then I looked at her. I said, I'm going to be your new best friend. And I said, and I'm so glad you walked into my office because I'm not going to lie to you. And I said, I'm going to be honest with you. I said, when your account, your $2 million drops to $1 million, and you need to take $80,000 because you need your 4%. Do you think you can take $80,000 out of your million after it's lost that much? She went, yeah. And I went, well, let's do the math. So I showed her my sequence of returns chart, and she went, whoa, I didn't know that's how that happened. And I said, it's okay to make 22% year over year. The stock market's going up, but it doesn't always go up. And you have to protect from when the market comes down so that you can still get your 80 grand every year if the market does go down. So how do you do it? And she said, Sharice, no one has ever had this conversation for me. I didn't know that. She's like, I've been sticking my head in the sand, and I just been listening to this other advisor all these years. And I said, well, he's been right. The market's been going up. You've been making money. You know, it comes down, you set it out, it comes back up, it hits new highs. But that doesn't happen forever.
Well, that actually brings us into a different area, Sharice, and that is people who have financial advisors their entire life. They're all focused on growth, but then they get into their 60s, they get toward retirement, and now we need a different kind of mindset, even a different kind of advisor, don't we?
Yeah, so they didn't have an advisor for like 10 years. In the last 4 years, they had an advisor, and the market's been going up and up and up, and they're even wondering if it's even worth paying their 1.3% to that advisor, because they said he doesn't do anything, but they're making money, so they're okay with that. And I said, well, what kind of advisor, if you're going to have an advisor, are you going to have? You waited 10 years ago, and now you have one, but now you're just wondering if you even need one. And I'm like, do you think you need that advisor that really bleeds on that story about let's protect? It's not what we make, it's what we keep, but we still want to have some accumulation, but we need also that safety bucket. And she said, I didn't think of it like that, and I never understood it like that. And I was like, that is what a fiduciary that does, in my opinion, retirement planning does. A fiduciary, a retirement planner that does holistic planning, not just the stock jock that's saying, hey, we're going to put your money in this. They were in like an 80-20 portfolio. That's at 80% risk, 20% fixed income. Like, that's high risk. And the stuff they were in was riskier than the norm. And I said, it can't keep ticking. And so I would love to work with you, but I'm going to have to talk you off the ledge because I won't be able to sleep at night knowing that you have all your money at risk and that you need $80,000 on this $2 million, because when the market goes down, I'm going to have a conversation with you and say, you are going to be the person who runs out of money if you continue to take $80,000 once it's dropped. And she's like, well, I'm coming to you because you do active management. You do some buy and hold strategies. You do dividend strategies. You do all these other strategies. And that's why we're here, because we're not doing that where we're at now. And so she kind of opened up why they were here. And I thought it was interesting because I hadn't really spoken to somebody like that in a long time, that nobody had educated her ever on what might happen or take place here potentially in the near future if markets and this roller coaster does start to take.
Well, it's kind of an interesting feeling that people have as you sit down and you actually see what you need and some of the things that you've never known before. It's kind of like, a couple brings you to a restaurant that you've never been to before, and you have it and it's fantastic, and you go, how did I not know about this? And they introduce you to new food or a new drink, and you go, where have I been? I didn't even know about this. And sometimes that's the reaction that people have as they come in and have the portfolio x-ray. I had no idea. How did I not know about this? Those kind of moments are good to have before you're in retirement so you can make the changes that you need to make. Give us a call. Let's go through it together. 833-368-3680. 833-368-3680, or online at zinniawealth.com, ZINNIA wealth.com, and look for that gold box that says complimentary retirement consultation. When you click on that, we'll have you put in a little information there, and our team will reach out to you. We'll get a date on a calendar.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 833-368-3680 or find us online at zinniawealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Sharice Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and or categories usually do not deduct transaction and or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.